Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Thursday, 22nd day of September 2016, and this is the Daily Report for Gold and Silver. Following announcements made yesterday by the Federal Reserve that interest rates would remain steady, we started a multi-day rally. Multi-day because for a second day in a row we have substantial gains in the precious metals markets. Not so much when you look at spot. Spot gold currently trading at 1336, 1337 in that area, putting it up just shy of $2 or 0.1%. Now, the big difference, of course, is when we look at our actual futures contracts. They're trading at 1341.10, up about 1090 or 0.75%. Quite a difference. And of course, the majority of our subscribers, including myself, when I'm looking at these markets, are looking at COMEX contracts. Now, silver also trading higher on the day. When we look at COMEX, up over 1%, 21 cents, just shy of $20 per ounce at $19.98, traded to a low today of $19.78 and a high of 2014. Lastly, we'll look at spot silver. As you can see, nominal change up about 0.5% or 9 cents at $19.89. The one interesting thing is when we look at the difference between the price of spot and December futures, we actually see that spread widening a little bit today. It is interesting. We'll try to make sense of it. But more importantly, we'll talk about our current open trade, long gold, long silver, as well as our stops, and really start to dig in our exit strategy, all on today's Daily Report. So traders, no doubt, I believe that we put on an exceptional trade yesterday. Actually, we put it on the day before, just before the meeting concluded, the FOMC meeting concluded. We saw an 11-point rise in overseas trading as Bank of Japan makes their policy announcement. And of course, when the Fed came out with their policy announcement of stable interest rates, no rate hike, so to speak, we saw the market take off another almost $10, about a $20 rise on the day. Now, today we had really extreme and good follow through. 1341.10. Of course, we got in this market, I believe, at 1317. Our stops right now are below 1305. We have not adjusted them yet, and that's one of the first things that we want to take a look at. Now, our stops are sitting below this point, 1305, and that is to account for any kind of volatility that we might have gotten at that FOMC meeting. Now, we did get some volatility because, as you can see on yesterday's trading activity, and realize that this is a half a day chart, so you get 2 candles per day. The reason that I do like to break it down to half a day sometimes is it shows us the evening session as well as the day session. In other words, what happened overseas and then what happened once we hit the mainland and started trading in New York. So we did get that low that came in, and then we had the follow through. This would be Bank of Japan, the move that we saw from that, and this would be the move that we saw from the FOMC meeting. So a considerable move. Now, in overseas trading, we did have the market slightly lower, this small red candle, but as we got closer and closer to opening in the United States, we had a resilient move to the upside. Dollar began to get weak, and we moved above our first real obstacle that I needed to see, which is a 38% retracement, 1337. We closed right at that point, as you can see, but we were able to really close well into that area and above it. Now, at the same time, we had this high today of 1347 that obviously could not be sustained. You can see that high right here. And the key on that one is that there is another resistance level, and that's the 23% retracement level right here that we need to overcome over the next couple of days. Now, the next level, obviously on top of that, has to be 1357. And that is this current top that we have. We have a top here at 57. And then a double top at 1376. So in terms of our exit strategy, we're going to start to look to raise our stops. Initially, we'll probably put them just below or at this candle right here. That comes in at about 25. We're in at 17, so that would lock in a little bit of profits. But I'm looking for more than a little bit of profits on this trade. Really, where I really want to be able to comfortably move the stop is below 1337. But we need to see it really move above this and kind of find support at this 23% retracement level. And that's when I would feel extremely comfortable actually going ahead and moving that stop up. But we're going to monitor it closely. We've got a good trade under our belts. You know, traders, you can take profits anytime you like, and there's substantial profits in this market. I'm not sure how high this will go, but I believe that we have an opportunity to really see this market breach and take out these current highs at 1377. But traders, I was fooled last time because we got into the market roughly in this area on our last trade, and then the following day we had that slight move down here and here, and then it really followed suit till it hit this double bottom. And so I'm somewhat concerned that we'll see some sort of repeat of that, but personally, I don't see that happening. But again, no one really knows the future. So we will look to raise our stops over the next couple of days. In terms of our upside targets are first, we've got to close over 1345, 57, and then 76. Those are the targets that we are currently looking at as potential places to pull profits if we see resistance in those areas. Now, traders, as far as silver goes, we've got a really good trade under our belt here because silver has been outperforming gold. So, for example, we got in this market silver long at 1930. We've almost got about 60 cents on this particular trade. We're at 1997. We're up about 20 cents, over 1% on the day. In terms of different areas that we've got to look at for potential resistance, the first area has got to be right in here. And the second area's got to be right in here. So just call it a 2070, which would be this hash mark right here, this arrow, right here. And then this particular price point that comes in, well, just at around $20 per ounce. That's where these highs are here, considering that our high today was 2014, which is right here. This particular line would be about 2020 to 2025. We'll review this entire trade tomorrow when we do our weekend review and talk about what we're looking for next week. For right now, maintain your current long position in gold, maintain your long position in silver, maintain your current stops. We'll look to move them up either tomorrow or early next week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly review. Bye-bye.